Hey guys, Khalil El Ghul here, and I am bringing you another market update. Second weekend in May, which is typically the peak of the market in terms of the selling season. So in theory, this should be the peak of inventory with regards to what buyers can expect to come on and off the market this year. However, that really hasn't been the case over the last 2 years. And I suspect this year there will certainly be some lag. I would say over half of the homes that I sold in the first quarter of this year had some sort of rent back, whether it's 30 or 60 days. So a lot of the homes that I sold in March and April, those sellers are just now moving out and the buyers are just now moving in, and many of them will now turn around and sell their homes. We are also expecting a ton of landlords to list their rental properties or investment properties this spring and summer. The rental season generally peaks in the summer months. So June, July, August, we'll start to see landlords take possessions of their properties and put them on the market for sale. The data is out. Inventory is finally improving. We're seeing more and more homes come to the market, more than we've seen over the last 2 years, even in relation to buyer demand. Still historically low based on 2019, 2018, from what we've become accustomed to and what has been the main driving factor in this market. That's definitely starting to wane. Inventory is getting better, and I suspect the rest of this month, June, July, and August, we will see more and more homes come to the market. If I were to sum up the market right now in one word, it would be peaking. I am of the belief that the market in terms of sales price is at a peak. Now, how long we stay at this peak is anyone's guess, but we are still seeing homes sell for record prices. We are still getting our asking prices, and we're still seeing pretty favorable terms. But there's a but, and it's a big one. The pace of the market is diminishing quickly. We are seeing far fewer buyers, and I'm talking dramatic shift in showings on our properties, open house attendees, online inquiries, you name it. We would go from 10 to 20 showings in the first day or two to 4 or 5. And that is consistent across all price points, various areas, and it's very anecdotal. At the moment, I have 19 homes actively listed or under contract in the MLS, from condos in DC, $500,000 to $2.5 million new construction properties. And for good reason. A lot of buyers bought in Q1 and they're out of the market. Good for them. Good interest rate, affordable payment. They're happy that they got in when they could. A lot of buyers have been priced out of the market, right? Because interest rates have just gone up so significantly. The best rate I saw this week was 5.625. That doesn't mean there's not better rates out there. That's just what I saw this week. And the third reason why I think buyer demand and showings have gone down significantly is because we are not seeing new buyers come into the market. The buyers that are in the market now are the same buyers that were competing in February, March, and April. So yes, they saw interest rates at 3.5, and they are definitely bummed out about higher rates, but they want to get in before rates get even higher, right? These are the buyers that have to buy. Life goes on for a lot of folks. They can't really time the market, but there's job transfer, kids, schools, you name it. The buyers in the market today are the buyers that were in the market a couple months ago, and they have to buy. In terms of offers, we are seeing far fewer offers. It's not unusual to get multiple offers on a property, but it doesn't necessarily equate to multiple good offers. We're not seeing big escalations. We're not seeing all contingencies removed on a regular basis, at least. They still exist. We certainly have a handful of them going on right now. It has diminished significantly. And keep in mind, we're also starting at a much higher price, right? The home I listed at $950 was worth $850 a year ago. So yes, at $850, it might have received 10 and 15 offers and it got bid up somewhere in the nines. Now we're just forgetting that and let's just start higher. There's fewer buyers to market to. Let's not roll the dice and wait for the market to set our price. Let's set our price and try to get it. So what does that mean if you are a seller right now or a potential seller within the next 30, 60, 90 days? So at some point, this crop of buyers is going to go away. They're either going to buy something, get priced out, re-up their lease, who knows? Or just stay put where they are, right? Not everyone is a first-time home buyer. More homes are going to come to the market. We'll start to see days on market increase a bit, and you're just going to have to negotiate. It's inevitable. We're all feeling it. There's no doubt about it in my mind. The frenetic pace that we saw in Q1 is just not here anymore. Whether that relates to a big price drop, small price drop, price drops at all, I'm not an economist. I'm not a financial expert. I'm not an investment advisor. I have no idea. All I can tell you is what I'm seeing right now. And what I'm telling my clients is get on the market sooner than later. The offers we're seeing, the traffic we're seeing on our listings has gone down so significantly that if it continues at this pace, the market will in fact shift even more to the buyer's favor. So what does this mean for buyers? I am just having too many conversations with buyers, whether they were passively in the market, which means, they weren't actively looking every day, but if something came on that was a good fit, it was in their price range, they were in a position to make a move, buy it, and then sell their home or end their lease. That's about 30% of the market are these passive home buyers. In fact, the home I'm sitting in right now, I'm always in the market a little bit, but when I saw my house pop up, I followed it for a couple months. I watched the price drop a few times, and then I came out, took a look at it, ended up liking it more than I thought I would. Next thing you know, we bought it and then sold our other home, right? So that buyer profile, for the most part, is shrinking significantly. The math just isn't great, based on what they're sitting on in their existing home. Rents are expensive. Yes, rents are going up, but rents have not gone up nearly as much as the price of homes, right? Or at the rate of the current interest rates. So if you're renting, yes, it might get more expensive to rent, but it's probably still less expensive overall versus trying to buy in this market where we are at these peak prices, super high interest rates. And by the way, your stock portfolio might be down 20 or 30%, at least mine is. And it's a hard pill to swallow, right? So if the right house came on the market today and I wasn't really in the market, hey, I'm looking at a rate close to 6%. I'm looking at pulling out my down payment at a 30% loss over the last 90 days or 6 months, whatever it might be. It doesn't make a lot of sense. And I'm not alone. I'm hearing that all the time. Buyers are just leaving the market. So I think fewer buyers are going to come into the market. So if you're a buyer going into the market, you're still up against those three factors. If you were competing and losing time and time again a couple months ago, or you were just not in a position where you could drop some of the contingencies with regards to financing, appraisal, inspections, yes, you can go out and buy a house today. It'll be more expensive, but at least you can go do it. But it's going to cost you. It's going to cost you high interest rates or peak pricing in my estimation. I'm not saying we're in for a crash or this is a bubble. Just saying, hey, prices are just about as high as I think they're going to be, whether it's in the short term, the midterm, but at some point, I think they'll inch downward before they inch upward. So if you're a buyer, you just have to be really careful out there. Some of these buyers are still programmed to think that every situation is a competitive situation. They've been sort of hardwired to think, oh, I gotta hurry up and go see this house. Oh, I gotta offer asking price or over asking price or waive contingencies. Like, no, you might not. On a macro level, from my anecdotal experience, and keep in mind, over the last 10 days, I put 10 homes on the market. I think 6 or 7 of those are now under contract and the other 4 are still active. Those 6 or 7 that are under contract, yeah, we actually did end up getting asking price or a little bit more for almost all of them except maybe one, but it wasn't easy. And there were concessions in terms of contingencies, inspections. Like, if someone asks us to replace the hot water heater right now, you better believe we're going to replace the hot water heater. And maybe we got multiple offers, but it was 2 or 3 offers versus 7 or 8 offers. And these offer deadlines, forget about it. We're not doing that anymore. We're going to look at every offer as it comes in, take it seriously, and really evaluate whether this is something we should accept now or wait through the weekend. Whereas, again, a couple months ago, if we got an offer on Thursday or Friday or day 1 or 2 of the listing, we just would hold on to it because there was just such low risk in terms of there being more offers come Monday and Tuesday. So if you're a buyer, be skeptical. Just understand that the market is different now. You may have more options. We help buyers buy homes in any market. I am not a financial advisor. I am not an investment advisor. I'm not here to help you build your wealth. I'm not here to service you. I hate when people say that. I'm here to sell. So if you want to buy a home, yes, we're here to help you buy a home. And the interest rates are what they are. The price is what it is. But the main factor that is different now is that there is less competition. So if a home does sit on the market for 4 or 5 days, 2 weeks, 3 weeks, there's definitely an opportunity to go in and get homes, whether it be under asking price, contingencies, sale of home contingencies. Those are back. No, we don't automatically dismiss those anymore. And that's, again, just because the activity has waned so significantly. We're still seeing healthy prices. Homes are still selling in relatively short time frames. Days on market are up, price reductions are up, inventory is up, and interest rates are up. The first three are pretty favorable for buyers. The fourth one is favorable for buyers because if they want to go buy a house, they can buy a house. So just keep those data points in mind, whether you're buying or selling in this market. So I hope that's helpful. If you have any questions or would like more information about your home, all my contact information below. Thanks and have a great rest of your day.